Hello traders, you're welcome to this video. In this video, we are going to be discussing some of the best MT4 indicators. So we are going to be looking at five of them, five of the best. Of course, there are a couple of parameters that different traders use to determine the indicators that are best for them. Yes, different traders might have different best indicators, but we're just going to look at just five of the best generally. Okay, so we're going to be looking at the moving average, the relative strength index, the Bollinger Bands, the MACD, and Fibonacci retracement in this video. Okay, so starting with the moving average, let us just load it onto our chart. I'm just going to use the period that is there. Of course, the moving average, you can set it to different periods, but irrespective of the period, the conditions for buy and sell signals remain the same. Okay, basically moving averages, they smooth out price data to help identify the direction of a trend over a specific period. Okay, so we have two common types. Those are not the only two types, but the two common types are the simple moving average and the exponential moving average. This is exponential. If we want to make it simple, just change this to simple, and this becomes the simple moving average. Okay. The exponential moving average reacts to price faster. We have already discussed that in a previous video. As you can see that this is the simple moving average, right? If I change it to exponential now, let me just shift this a bit. If I change this to exponential, you're going to see that the moving average is going to get closer to the price. Can you see? Wait, let's do that again. This is simple. Did you notice a little bit, just a little bit moving away from price? Exponential. You might want to watch around here, you'll see it. Can you see that the exponential moving average got closer to price? So the exponential moving average usually follows price more closely. Yes, so if you are a scalper, maybe you might prefer using exponential average compared to simple. But if you are more of a long-term trader, you might also prefer, or sorry, if you're a long-term trader, you might prefer using the simple moving average. However, whichever one you are using, it all depends on your it depends on your tolerance, depends on your own preference basically, because both of them are great, whether using the simple or using the exponential, both are great, right? So how do you set it up on your chart? Of course, I just already did that. Basically, this is the MetaTrader platform. So this is for how to set it up on the MetaTrader. When you go to insert, go to indicators, then here you can select the period that you want. Longer periods for longer term trading, shorter periods for shorter term trading. Right here, you can select if you want the simple moving average, exponential, or smooth or linear weighted. Here you select the color of the moving average. Here you can select the thickness of the line that you want, and then here this you can just leave this as the default settings. Then here you can choose what time frames you want the moving average to be visible on. You can just decide to leave it as all time frame, but if you want to use it on specific time frames, then you might just want to select the specific time frames that you want to use it on. Okay, so that is it. Now, when you want to use the moving average effectively for trend identification, you might want to use a longer period moving average because, like I said, longer period moving average, like this value here, if you increase the value, the moving average tends to respond slower to price movement. So if you are looking at being a trend follower. If you want to follow trends, you might want to increase the period because the moving average is not going to be quick to bend. Hence, it is more effective for trend following. For example, using the 200 EMA. The 200 EMA is one of the most common periods, like the period 200, one of the most common periods for trend following. As you can see now that the price is now responding very fast because it is aiming at trend, right? As you can see that the trend of this asset is currently bullish. You can see that the moving average, despite all these price swings, the moving average has steadily been pointing up, showing that the trend is actually bullish. Okay, so if you want to follow trends, you might want to increase your period for the moving average. But if you want to scalp, if you want to be a short-term trader, then it's fine if you decide to use a smaller period, right? Example, the 21 or maybe the 10, depending on, like I always say, your tolerance and your, you know, how long you want to hold your trades and all of that. Okay, another thing with the moving average is one of the common strategies with the moving average is the crossover strategy. The crossover strategy involves using two moving averages. Okay, so we're just going to add on the 9 moving average. This is like one of the common combinations, 9 and 21. Okay, so the crossover strategy is when the faster EMA, which is in this case the 9 EMA, when it crosses above the slower, which is the 21, in this case, you have a bullish signal. On the other hand, when the faster moving average crosses below the slower moving average, you have a sell signal. So basically, that is how it works. That is how it works. And when you have a sell signal, of course, you set your stop loss above the swing high or above the nearest resistance. Take profit could be at the nearest support for a buy. Take profit could be at the nearest resistance, and stop loss could be at the below the swing low. And then of course, using other indicators for extra confirmation is going to be a great idea. Now let us look at the second indicator on our list. The second indicator on our list is the relative strength index, the RSI. It is a momentum indicator. It's one of the most common indicators used for gauging momentum, right? And it measures the speed and change of price movements on a scale of 0 to 100. Okay, you can see the scale here. It measures the speed and the scale, the speed and the change of price movements. Okay, now we already loaded it on our charts. Basically, if you want to do that on the MT4 time frame, you go platform, you go to inserts, indicators, you go to oscillators, and then relative strength index. Then under the parameters, just like with the moving average, the longer the period, the slower the reaction of the RSI to market movements. Okay, here you select the color you want, here you select the kind of line and the thickness of the line as well. And then let's just use this as an example. You see, if I increase the period now, the RSI is going to smoothen out. So as we can see, it's smoothing out. Okay, so that is basically it. Depending on the kind of trader that you are, if you are targeting long term, then you might want to use a longer period. But if you're more for like day trader, or you're targeting short term, just want to catch some quick price moves, or even as a swing trader, maybe you're just targeting um, trading in some days or in some weeks, the default RSI settings should be okay for you. You don't need to extend this period, right? Okay, now as for the levels, the 30 levels and 70 levels are the default. But if you want to increase the overbought level and oversold levels, you can actually. You can reduce this if you want to have a more tighter oversold, and you can increase this if you want to have a more tighter overbought. Okay. Now, how do you use the RSI? The RSI basically gives us oversold and overbought conditions, signals, like when the price is in the oversold, when the RSI is in the oversold and it begins to curve upwards, the buy signal. When it's in the overbought, begins to come downwards, it's a sell signal. So you can use this RSI to know when the bullish momentum in the market is getting weak, and you can use it to know when it's getting strong as well, because if you see the RSI trending upwards consistently, it shows a strong bullish momentum, as we can see around here. But when you see the RSI going sideways, it shows a weak momentum. Okay, and on the other hand, trending downwards consistently shows strong sell momentum. But when you see it moving sideways, it's a weak momentum, right? And when the RSI is in the overbought, it shows that the buying move might be coming to an end. When the RSI is in the oversold, it shows that the sell move might just be coming to an end. Okay. Now the third indicator on our list is the Bollinger Bands, right? I'm just going to be adding the Bollinger Bands. So how do you add it? The Bollinger Bands, it consists of a moving average. Yeah, it actually uses the moving average concept, usually the 20 period SMA, and two standard deviation bands. But let us add it onto our chart so you can really see what I'm talking about. Now, if you want to add it, you go to indicators, trend, Bollinger Bands, right? Now, this is where you set the period for your Bollinger Bands, okay? And then the deviations, you can use the default settings for the Bollinger Bands, but if you want to be like a more specific trader for a particular kind of trading, then you can, modify to suit your trading style, okay? All right, now the default setting is actually 20 period and 2 for the deviation, How do you use this indicator? The indicator helps you to identify volatility. When the bands are tightening, it shows a volatile market, as you can see. When the bands begin to go sideways and are kind of as if they're squeezing each other, it shows a volatile market. However, when the Bollinger Bands are moving in one particular direction, for example, moving upwards like this, and you have price moving in one section, for example, the price is moving in the upper section of the bands, it shows a bullish move, right? A bullish trend, bullish momentum, okay? But on the other hand, when you have price moving on the lower section of the Bollinger Bands, and you have the Bollinger Bands actually moving downwards, it shows bearish momentum, right? Now, when the bands are tight, when you have a tightening of the Bollinger Bands, it usually shows low volatility. Yeah, and oftentimes it's followed by a breakout. As we can see, there was a breakout that happened here right after this consolidation. We had a breakout, right? Now, when the widen, it shows increased volatility. Okay, let us look for a place where there was proper widening out. Hope I can find one. Let us go to a smaller time frame. Okay, can you see how this was widened out? It shows higher volatility. You can see how the price spiked up this way, and then look at all the things that's happened. Look at what happened within here, just this period like this. You can see how this portion widened apart, this portion widened apart. It shows increased volatility, right? Now you can use the Bollinger Bands to trade price reversals, because when the price touches the upper band, for example, when it touches the upper band like properly, it shows that it could be an overbought condition and you can sell. You can see that as it touched the upper band, like pierced through it, not just touching, but piercing through it. If you sell, there's a likelihood that the price will come back at least to the middle band. On the other hand, you can see this is a sell scenario. It pierced through the lower band, and eventually, although it was not immediately in this case, but eventually you see it came back up to above the middle band up to the upper band. So you can use the Bollinger Bands to trade price reversals, right? Now, for our next indicator on the list, we have the moving average convergence divergence. Now, to set it up, you go to indicators, you go to oscillators, and you go to MACD, right? Now, these again can be modified to suit your trading style. The MACD is a trend following indicator. It consists of two moving averages. You can see fast EMA, slow EMA, right? Like this make up the MACD, the parameters that is used to construct the MACD indicator. And then it also has histogram bars. Let's just load it up on our chart, right? Now you can see that this is a momentum indicator. It is an indicator that gives us, helps us identify when there is a strong momentum in the market or weak momentum. You can see that when MACD line crosses above, when the MACD line crosses above the zero line, it shows that there's a buy signal. And then when you have increasing histogram bars, that is the length of the histogram bars are increasing, that shows that the bullish move is quite strong, like the momentum, okay, as we can see here. On the other hand, when you have the histogram, the MACD line cross below the zero line, and you have, lengthy histogram bars below the zero line shows some increase in bearish momentum, right? So you can use this crossovers, the MACD line crossing above the zero line for your buy signal, MACD line crossing below the zero line for your sell signal, right? We've already talked about MACD in previous videos. So if you want to get more details on how it works, you might want to check out the previous videos, okay? Now, the next indicator on our list is the Fibonacci. The Fibonacci, okay? We're going to be using the Fibonacci retracement specifically. Now, the Fibonacci retracement, the levels from the Fibonacci retracement are used to find potential support and resistance levels by measuring the retracement of a move, right? So, for example, we can see that this is a bearish trend. It's a bearish trend, right? And normally, price does not move in a straight line. So when you have a wave like this, there's tendency for a retracement before the move continues, right? So Fibonacci levels like the 38.2, 50, 61.8, they're often used as potential support or resistance zones. 23.6 is also, all these lines you can see here, there are potential reversal zones, all these lines, right? Okay. Now, when price gets to any of these levels, any of these lines, for example, in this particular situation, it got to the 23.6 before it's, reversed, before it continued its bearish move. In some cases, it might get to 38.2, some cases 50, some cases 61.8. If it gets to 100, then that's probably not a pullback anymore. It's probably the start of a new trend. Okay. For example, if you're having a bearish move like this, and then you have a wide retracement all the way up to 100%, then it's possible that that bearish move is coming to an end. Okay. So this is how to use the Fibonacci retracement. You can use it to target possible reversal zones or possible retracement zones, possible zones of continuation after a pullback, right? Okay, the 23.6, 38.2, 50, and 61.8 are like the very, very key zones for such reversals. So now, if you want to enter a sell, you can just enter a sell after you get some confirmation at one of these reversal zones. Okay, now how do you draw the Fibonacci? Just in case you are not sure of that, in a sell trend, you start. This is our point A. Start from the tip of the point you want to. How am I going to explain this now? If you want to find the possible place where the pullback is going to happen, you have to target the tip of the this is your point A, the tip of the initial candle. I didn't even target the tip properly. The tip of the initial candle that began that move, right? And then you want to draw the Fibonacci, you want to stop it at the tip of the candle that began the correction. Okay, the tip of the candle that began the this swing, this leg, you target it to the tip of the candle that is beginning the correction. Then from there you can now target the possible reversal zones. Could be 23.6, could be 38.2, could be 50, could be 61.8. So if you now begin to see any signs of reversal around any of those zones, it could be a sign to sell. On the other hand, if it was a bullish move, and it happens, it could be a sign to buy. Understand? So now, because we see some consolidation here, and we see a doji here, and then eventually price continues its bearish move. So you might want to look out for any candlestick pattern that shows a potential continuation, or or a sign of a bullish breakout, whatever the case may be. Okay, when you get your confirmation signal, then you can go ahead and enter your trade. So basically, these are some of the best indicators on MT4, right? And a final tip: when each of these indicators is powerful on its own, although they are powerful on their own, combining them together can provide even stronger signals. Yeah, for example, if you're using the RSI to confirm a trade with Fibonacci retracement, or maybe you're pairing the moving averages with the MACD or trend confirmation, you can help reduce false signals, right? So combining indicators for extra confirmations actually is a great idea, is a great thing to do, right? So by mastering these MT4 indicators, you'll be able to analyze the market more accurately and make better trading decisions. I hope you found this video insightful. Kindly like and subscribe for more. Cheers and happy trading.